In today's episode, we're going to talk about how to become a loan officer. To help us with that, we have Dustin Owen with Waterstone Mortgage. He's a divisional sales executive and host of the Loan Officer podcast. In today's episode, we're going to be talking about what classes to take, what tests are required, how to prepare for the tests as well too, and then we're also going to talk about like what makes a loan officer successful, meaning like what personalities do better as a loan officer and what kind of people succeed in this industry. Welcome to the show, Dustin. How are you?
I'm doing fantastic, Jose. Thank you so much for having me on your show today.
Yeah, I'm excited about it. Obviously, I know all the requirements as a real estate agent, but I actually don't know any of the requirements as a loan officer. So I'm excited to kind of share this information. So let's jump right into it. If somebody wants to become a loan officer, like what is the first step?
First, you have to be crazy. So if you're crazy, this will work for you. If you're not crazy and you're sane, you probably shouldn't look this direction for your career. But in all seriousness, and I do want to talk about the personality profile of someone who is successful as a mortgage loan originator, which, by the way, LO, mortgage broker, MLO, mortgage advisor, loan officer, loan originator, they're all synonymous, meaning that's all the same. You're a loan dude or a loan dudette. You help people obtain home loans so they can purchase real estate, or what I say is I help people leverage debt so they can generate wealth through real estate, right? That's what a mortgage loan originator or an MLO does. And first and foremost, if you want to become an MLO, for most of us, it starts by taking a 20-hour course, a 20-hour course. It is the 20-hour SAFE course, SAFE. Now, what's crazy, Jose, and you may or may not even know this, is someone goes and works for a credit union or a depository or a wholly owned subsidiary of a depository, by the way, bank. If you work for a bank, you actually don't have to take this 20-hour course. It's something that's a little bit wonky, in my opinion, as it pertains to my industry. But when you go to work for a credit union, a bank, or a bank-owned lender, then it's assumed by the regulators that the bank is going to make sure that you have taken the proper coursework or that you will receive the proper coursework. But for most of us, you start with that 20-hour course. Well, that's the easy part. Because once you take the 20-hour course, which if someone's saying, hey, where do you go for the 20-hour course? Check out my buddy Ken Perry has a company called Knowledge Coop. Go to Knowledge Coop. You can get your 20-hour course there. They're not the only company, but I like what Ken does because he makes learning fun. And you'll get to know this about me. I like to have fun. If I'm not having fun, I probably don't want to do it. So you start by taking the 20-hour course. The second thing you have to do is you now have to study. And by the way, you have to study for and pass the NMLS exam. So that's our National Mortgage Licensing System, right? That's where you're actually going to be registered. And less than 60% pass their first go round, which is why I stress you have to study. And for those that don't do well, or those that are afraid that they're not going to pass first time through, I got another buddy of mine. His name is Rocky. Rocky has this Facebook group. Yes, a Facebook group called MLO Study Buddy. Now that Facebook group has now launched into a company. So you can buy study materials. You can sign up to be a part of a prep course that Rocky offers. But I would tell you, nobody that I've come across in my 20 plus year career of working in the mortgage industry has helped more people pass that darn test. So that's step one is take the 20-hour course. Step three is pass the test. But just like you probably learned, Jose, with real estate, just because you pass the test doesn't mean you know what you're doing. But that's the barrier of entry. That now allows you to go out and find an employer, which, by the way, people will say, I need a sponsor. I'm like, wait a minute, is this AA? No, you don't need a sponsor. I know that's technical jargon, but let me talk to you about how we talk about this on the street. No, you want a career opportunity. You're looking for an employer because this person is going to employ you. Yes, they're going to, quote unquote, sponsor your NMLS, but you need an employer. So first step, take the 20-hour course. Second step, pass the exam. If you need help passing the exam, check out MLO Study Buddy. And then third step is you need to go and find an employer. Now, what type of employer? Oh, that's a whole nother ball of wax. Like, how do you choose your employer? And if you'll give me like 90 seconds, I'll give you my quick answer. You good
Love
with
it. Let's
that?
do it.
All
Yeah,
right.
yeah. Let's do it.
First and foremost, I do not care if someone becomes a credit union associate, a bank associate. If you want to work for a national lender like Guaranteed Rate or Cross Country or Guild, if you want to go work for a small mortgage brokerage, or if you want to go work in a call center doing what we call consumer direct, I do not think there's a bad way to launch your career. And I don't think one way is better than the other, although there are some people who like to be like, oh, brokers are better, or no, it's better at a bank. I think to each is their own. I think when you're looking for an employer, you're looking for an opportunity to learn, which means you're looking for someone or some company that's going to offer you training, mentorship, coaching, and I believe in the iron sharpens iron. So you need to be around other people who either have done what you've done, who have come from where you come from, or that are trying to do what you're trying to do. And cohesively, you can work together to try to achieve those goals. So I don't care what company someone works for. I care that they find a local company with good culture who's going to coach them and train them. Because I don't care how great someone's interest rates are or how great someone's comp plan is, if you can't take a file from lead to funding, then that great comp plan and those great interest rates went wasted because you didn't help anyone obtain a home loan and you didn't earn a commission check for yourself. So in the early stages of one's career, it is most important that they find a lender or a company or a career opportunity that's going to mentor them, coach them, and train them, because it's going to take 2 years, minimum 2 years, for you to actually learn your craft.
Got it. I love it. You know, it's funny. I think that's a great response. And looking back at a lot of newer agents from the real estate, what they're really looking for is just an opportunity to learn, which I think that's in the very basics, like, hey, what company are you for? Looking for what's going to be the best opportunity to learn. And if you can learn, then that'll launch your career. I did want to ask you this because some people may think like the test. If you pass the test, does that allow you to be a loan officer for one state, multiple states? Do you have to pass multiple tests for different states? How does that
Yeah,
process work?
this is going to vary from employment situation to employment situation, and yeah, my two favorite words in mortgage lending is "it depends." Right? That's like
Yeah.
when a borrower calls, "Well, can you do this type of loan for me?" I'm like, "Well, it depends." Right? It depends on so many different components of your makeup. Typically, when you pass the test, assuming you're not working for a bank or a bank-owned mortgage company, that's going to be for that state. And each state's going to have their own requirements and their own red tape to cut and their own hoops to jump through. But it's typically one state. Now, sometimes if you're licensed in one state, in order to get your license in another state, it may be only an extra couple hours of work, or it may be, an extra 10 hours of work plus money, plus fingerprints, plus. So yeah, it's not a blanket. You can just go lend in all 50 states. Each state has their own requirements. It's definitely easier if you work for a credit union or a bank-owned lender. But the most basic answer is no. You're going to be studying for and passing your exam and then getting licensed in that particular state.
I love it.
But the
Got it.
licensing is a national test. It's a national test, but then you have to get your state license.
Okay, so after you pass the national test, you have to get your state license. Any idea like how long the national test is, questions, percentages to pass?
Gosh, I should know this because I've had two experts on. I've had Rocky on and I've had this other gentleman on to talk about this. I couldn't tell you if it was 40 or 60 questions off of memory alone. And truth be told, right? Truth be told, for the past 15 years, I've worked at Waterstone Mortgage. Waterstone Mortgage is a wholly owned subsidiary of Waterstone Bank. You know what that means for me? I have an unfair advantage compared to my peers because I haven't had to take that 20-hour course. I haven't had to study for and pass that exam. So from firsthand experience, I can't tell you how many the questions was, and I've learned it and I've been told it, but I cannot tell you if it was 40 or 60. That's a great question for someone like Rocky.
I love it. Okay, good. Now, a lot of times, and this is confusing to different people sometimes. Sometimes, like if you go work for a big bank like Wells Fargo, and you're trying to get a loan done, they may not be able to qualify somebody because they have additional overlays.
Yes.
Versus if you work with like a different bank, or even if you work with a broker, like what are the pros and cons of the different
Yeah,
ways
I
that
love it.
the
Yeah.
employers work?
Pros and cons. If you work for a bank, here's what I can tell you. You work at a bank, you have a built-in lead source because there are already customers of that bank, and those customers are going to reach out and ask their bank to do a home loan for them. If you're
Mm-hmm.
working for a bank, you have a servicing portfolio because as a loan officer, you can get paid on both helping people buy houses as well as refinance their existing mortgage. So you have a client base that if and when rates come down, you can research who has a interest rate. Let's say it's at 7.25 and rates are at 5.75. All of a sudden, you can start making phone calls and start doing refinances and start earning commission checks. Like that's a benefit of a bank. Banks also come with big national brands. Now, sometimes that works against you, sometimes that works for you, depending on your market. That's where those two words come into play. It
Mm-hmm.
depends. But that would be an advantage of a bank. Banks are going to be more structured. They're going to be more selective in who they hire. It's going to be definitely a more formal work environment. And my experience only is banks do mortgages because they have to, not because they want to. So when you're working for a bank, if they want to do mortgages, oh, they're going to do them. They're going to have the best rates. They're going to have some of the best products. But if they don't want to do them, which they don't always have to do them, then they can de-incentivize people from coming to use their company by shortening the amount of products they have on the shelf or by increasing the rates they charge to those people. So if I'm a loan officer at a bank, it has pros, but it also definitely has some cons. If I'm a mortgage broker, the benefit is I am as entrepreneurial and autonomous as they come. But I don't have structure, I don't have support, and I can't control the process. So brokers will tell you they love being brokers because they can shop for the best rate for their client or the best underwriting approval process for their client. And they can shop amongst 8, 10, 12 different lenders. But I will tell you, they lose control, right? When I worked at, you use the term Wells Fargo. If it was Wells Fargo, I've never worked at Wells Fargo, by the way, but I know that the person who's underwriting and funding that file also works for Wells Fargo. I know that if something goes sideways, there's someone I can call up the chain of command and make stuff happen. When I am brokering a loan, I broker it to a third party. I don't work for that company. That company doesn't work with me. We don't have the same W-2. I can't guarantee that I'm going to have control of that particular loan file. Now, there's definitely some wholesale lenders out there that do an amazing job of proactively communicating and making their teams widely accessible. And some would argue even more accessible than the loan officers who work for banks. But that would be why someone would potentially not want to work as a broker. Also, on a broker, you very well could be on an island. You signed up to be a broker because you wanted the most amount of commission and you wanted the best ability to shop for the best rates. But you might not be getting mentorship, but you might not have systems and process. You might not even be a W-2 with benefits. You may be a 1099 and you may be paying for credit reports out of your pocket. I mean, it's one of those where it's in life I've learned you get what you pay for. So if I want to have the best rates and the highest commission, there's a good chance I'm also not going to get health benefits. I'm not going to get a 401k. I'm not going to get much mentorship or a whole lot of coaching or any systems or processes that I can tie into. But that's because I demanded the best rates and the highest commission. If I want mentorship, if I want systems and processes, if I want a good sales culture, then more than likely I'm going to have to go work somewhere that's a little bit larger, a little bit more corporate, and I'm going to be more than likely compensated a little bit less, but I'll be able to do more loans. So then I have to ask myself, what matters more to me? Do I want to make the most amount of money per loan, or do I want to make the most amount of money? My job, for me, my whole career, my answer has been, I want to go somewhere where I can make the most amount of money and have work-life balance and do the things that I'm really good at doing and doing them over and over and over again. So I don't want to be IT. I don't want to be HR. I don't want to be compliance. I don't want to be all the things that I would have to be if I worked at a small brokerage and I was the owner. But because of that, I give up maybe a piece of the commission because I work for a larger company. I want to go somewhere where I can focus on doing what I do really well. That's consulting home buyers, that's structuring financing and closing loans. And I want to do that the most amount of times to make the most amount of money. So it's like, if I could make $4,000 a loan and close 100, or I could make $8,000 a loan and close 30, which is better. Well, 4,000 times 100 is a lot more money than $8,000 times 40. So that's the decision that many mortgage loan originators will have to make. And there's no right, there's no wrong, there's no personal preference. There's no right or wrong. It's all personal preference. And it's a matter of choosing what's best for you at that time. A lot of people getting into the industry, they may have taken the only career opportunity that was available, make the most out of it. And after 1 year or 2 years, you have to reassess your situation and figure out, is this still what's best for me? Or do I need to make a career move? Maybe some companies that wouldn't hire me early on because I was young, green, wet behind the ears, new. Now they'll look at me because I have a little bit of experience underneath my belt.
I love it. Now, is there a different license that is required to have loan officers working underneath you? Like if I'm in real estate, obviously a broker's license allows me to have other agents underneath me. Is that the same in the loan officer / mortgage?
No. Yes and no. Like most regional managers, branch managers, sales managers that work at large independent mortgage bankers or even work for that local mortgage brokerage, they do not have to have a separate license to manage, coach, and mentor other loan officers. Now, obviously, if you were to try to start your own mortgage brokerage, there's definitely steps in that process, but it's not like in real estate where you have to go get a broker's license now. You're saying NMLS license will work, but you do have to have certain requirements. If you want to own your own mortgage brokerage, personal net worth is one of them, as well as years in the business is one of them.
Got it. You mind me asking about the compensation, and we're kind of deviating a little bit now,
Yes.
and I think this is good. We're going to go into what's day to day as a loan officer as well too, and then maybe we can even give some tips as to like if you want to become a top producer, like what that takes. What does the compensation look like for a mortgage broker? How do mortgage brokers get paid versus if it's salary plus commission versus like maybe the independent broker as well too? Like how does that work?
Yeah, so only a bank or a credit union would bring someone in as salary plus commission, right? That's kind of more their jam, and they do that because they have a set client base that you're going to be servicing.
Yeah.
If I look at your independent mortgage bankers, we call them IMBs, and I mean if I could go down the list of the guilds, the New American Fundings, the Movement Mortgages, the Cross Countries, right? I can just keep on naming names. Those companies and their loan originators tend to earn, and this is important to understand because this is a W-2, right? This is net. They tend to earn somewhere between 90 and 125 basis points, which is 0.9% commission to 1.25% commission on the loan volume. Because you can go work at a different setup, let's say a mortgage brokerage, and they may be like, oh, I paid 200 basis points. But that person's 1099, which means they have a different tax structure in terms of their employment taxes. They're not eligible for company benefits, not eligible for 401k and 401k match. Those people typically are having to pay for their own credit reports, their own business cards, their own website. There's all the services they're the loan origination software that they use. So although they're making 200 basis points, which is 2% commission, that's not a net number. It's the gross number. And then once you back out all of the expenses that maybe someone working at an independent mortgage bank has, it's probably more per loan, but it's not drastically more per loan the way that someone would want to make you believe.
And how does that how does a buyer, who pays for that commission? Like, is it the buyer when they originate the loan? Is it a line item on the closing statement? Is it the company originating the loan? Like, I've never kind of been clear on that.
Yeah, so typically the commission is built into the interest rate across the board, whether you're getting your loan from Bank of America, from Joe's mortgage brokerage, or you're getting it from one of the top 5 independent mortgage banks, let's just say Guild. Okay, that there's a certain value between what the lender paid for the money what the lender's now delivering that mortgage into the secondary market, and then what's the value in servicing the loan, right? So you have the spread, and you have servicing values. I'm not going to try to teach a class on the business side of the mortgage industry,
Yeah.
but just know here's how banks make money, right? Banks come to me and they say, "Hey, Dustin, I'll pay you 2% to put your money in this money market account." They then turn around and go to Jose. They say, "Jose, I'll give you this car loan at 6%." The bank is using my money that they're borrowing from me at 2%
Hmm.
because I deposited it into my money market account. Then they're lending it to Jose and charging Jose 6%, and the bank's picking up the spread of 4% minus the bank's overhead, because the bank has a brick and mortar and they have staff and they have their own cost. Mortgages work the same way. We as lenders go out and borrow money, and we borrow it at a certain price. We then deliver the loans into the secondary market where someone pays us a little bit more than what we paid to manufacture the loan. And then there's another company behind the scenes saying, "Oh, and by the way, I'll service that loan for you, and I'll pay you X I'll pay you X to service the loan." But ultimately, how's the loan officer making their money? As a part of that spread. So whether you're a broker and you're making 275 basis points gross, whether you're an independent mortgage banker making 400 basis points gross, or you're a bank making 500 basis points, there's a dollar amount gross being made, usually a percentage of the loan, on it. And then there's a piece of that that's being carved out to pay the processor, the underwriter, the loan officer, all of the compliance that's required, the office building, the computers, the IT, the HR, the marketing, right? It's like any other business that operates. The loan originator gets paid a piece of the total revenue that's being generated on that loan. The total revenue is being generated based on a spread between what we made the loan for versus what we sold the loan for.
And I've got a question about this. Like, I have a loan officer that I always notice their rates are a little bit higher than other people. She gets the job done, but I always notice the rates are a little higher. Does it, if they charge a little bit more, does that mean that they make more commission?
No,
No, doesn't.
no, not necessarily. It doesn't mean they don't, but it doesn't mean that they actually do. What it means is that their business model is one in which for them to deliver on the service that they provide, right? The service that you have grown accustomed to, that their borrowers have grown accustomed to, that maybe even the community expects out of them. That service requires X amount of revenue to pay for all of that support staff, let's call it, or that
Hmm.
infrastructure. I mean, I pay more money to stay at a JW Marriott than I do to stay at a Courtyard Marriott, although they're both Marriotts and they're both hotel rooms, but there's a certain amount of service that I demand out of the JW
Yeah,
that I don't necessarily demand out of the Courtyard.
got it. So, what does a day to day look like as a top producer? Like, if I wanted to be a top producing loan officer, like, how is that different than just a day to day for somebody that doesn't
Well,
do much business?
that's a great question. And first, let me start with this. This is a career. This is not a side hustle. This is not a part-time job. I know today's episode is about how to become a mortgage loan originator. Yeah, the
Yeah.
first thing I would tell you, it's not a side hustle. It's not a part-time job. Okay, you are a financial sales professional. You impact the American populace more than financial advisors do. So you have to
Hmm.
be great at what you do. You have to understand things like credit, budgeting, compound interest, how to leverage debt to purchase real estate. Like, you have to be more financially astute than the average person if you're going to be any good at this. And by the way, you owe this to the consumer. This is their number one asset most
Hmm.
times and their largest purchase. So the day to day, it starts with, if you're going to be in this profession, it's your profession, it's your career. You get up every morning, you put on your uniform, and you go to work, right? What does that mean? That's, to me, Monday through Friday, 8 to 5. Now, yes, if you want to work 7 to 3, you work 7 to 3. If you want to work 9 to 6, you work 9 to 6. If you need to leave Wednesday at 2 o'clock to take little Johnny to get his braces put on, it's an entrepreneurial sales profession that gives you some flexibility like any other entrepreneurial sales profession does. And top producers understand that their number one job is to get a lead. to get a lead. It's not to calculate income. It's not to read a bank statement. It is not to read guidelines. In fact, we're going to have robots and computers that do that really well over the next 2 or 3 years. But it's your job to be an advisor. It's your job to be your local community expert. It's your job to be the source of information. So honestly, it's your job to get a lead. And I think that's where so many people, Jose, fail is like, oh, I loved it when I bought my house, or, oh, I'm good with numbers. I'm like, yeah, but are you good with people? Let's start there.
Yeah.
Do you like people? Do you like to coach? Do you like to teach? Do you like to problem solve? And are you entrepreneurial? And to me, someone who's entrepreneurial is that guy or girl that says, hold my beer. It's that guy or girl that's willing to run through a brick wall because there's $20 behind it. And not so much that they need $20. It's because
Mhm.
someone told them they can't. And by the way, there's $20 and they're going to go get that $20 and prove to someone that they can. So I think first and foremost, you got to be a coach. You got to love personal finance. You got to be a good problem solver. You have to take yourself serious. It's going to take you 2 years to build it. And top producers, what do they do really well? They brand themselves, they market themselves, they understand that it's their job to get a lead, and they focus on lead generating activities, networking activities, sales and marketing activities first. And then from there, yeah, you do have to know a thing or two about programs, products, and guidelines, even if it is because you have to talk to your robot or you have to talk to the computer and make sure the computer is doing the right thing by the consumer, because your job may very well 2 or 3 years down the road be get the lead, consult with the client, figure out their emotional well-being, speak to their fears, caress their anxieties, and then with your computer, your AI, I call them robots, then help come up with the best couple loan options, and then tell your computer, whoops, sorry about that, then tell your computer to go do all the heavy lifting from a technical standpoint while you go consult with the next borrower. So top producers, what do? They get up every day, they put on their uniform, they go to work, they put in a 40 to 50-hour work week, and they focus on being their local community expert. They focus on networking, they focus on marketing, they focus on lead generation. And when they get that lead, they service that client at a level higher than the call center person, higher than the guy or girl who may be a bank teller also trying to take a loan application.
Yeah. So what is it like? What are some of the best ways to lead generate in the mortgage business? And it's funny because when I got into the real estate business, I came from a retail background, and in the retail stores, people would come to me. And I took my test. I thought it was going to be exactly the same, that everybody was just going to walk into Century 21 and be like, hey, I want Jose to help me, or that I was going to post somewhere online, like I got my license and people were just going to run to me. Unfortunately, that wasn't the case. And I had to learn how to lead generate from a mortgage perspective. Like, let's say you don't work for a big bank, like somebody who has traffic coming in. What are different ways to lead generate, and what percentage of your time should be spent lead generating?
Perfect. Love it. 3 hours a day, more when you're new, less when you're established, but 3 hours a day. And I'm going to share this. It's one of my favorite sayings. If it's new, it's not true. And if it's true, it's not new. Okay. So tried and true methods still work. Now we will leverage video marketing. We will leverage online networking, which is social media. We will leverage technology, but we're still going to do the tried and true. And that is working your circle of influence and expanding your network. One of my second favorite sayings is your net worth is the sum of your net work, meaning the more people you know, the more opportunities you have to make money. So for us on the loan origination side, we're going to start with who is everybody that you send holiday cards to? Who are those people that you invite to your wedding if you were to get remarried or get married and throw a Mac Daddy wedding? I'm talking like DJ, live band, and open bar, right? Like the party of the century. And those people need to know what you do for a living, and not that you're going to hit them up. Why I love being a mortgage loan originator, I don't sell anyone anything. Nobody wants a mortgage. Everyone dreams about not having a mortgage. People, though, dream about having a house, so they need a mortgage. So I'm not going to call my friend the way that I would if I was selling life insurance and convince him or her to buy life insurance. No, I'm going to call them and let them know that this is what I do for a living. And by the way, if you ever have any questions regarding buying a house or restructuring your home loan to better match your financial needs, wants, and goals, please call me. I will hook you up. I will take great care of you. But more importantly, here's where I need your help. It's my job to network with realtors, builders, divorce attorneys, financial advisors in our local community. Who do you know? Because I'm looking to bring value to those people. So, Jose, to answer your question, our best lead sources, besides our circle of influence and eventually our past clients, but in the beginning, it's real estate agents, it's home builders, it's financial advisors, it's divorce attorneys. And you're not looking to sell them anything besides sell them on yourself. Sell them that you care about them, you care about their business, and you have to get good, which in the beginning you won't be, but you have to get good at finding ways to bring those professionals value. Like, hey, Jose, you're a realtor, I'm a lender. Like, what are some things that you look for in your lending partner? What are some things that you like that lenders do today? What are some things that you don't like? When I'm listening to you, I'm taking notes, but I'm looking for opportunities to bring you value. So my way that I bring realtors value is I help them either generate leads, I help them better convert the leads they already have, or I bring them particular products that I can teach them how to use this product to market to their database to elicit the calls that they require. Now, obviously, I have to do a great job. I have to be I have to be the person who proactively communicates. I have to be accessible. I have to deliver. Those things are given. So I would tell that person getting started, realtors, builders, financial advisors, divorce attorneys, you can get the names of those people through your circle of influence. That way you never have to cold call. Every call that you're making is somewhat of a warm call because you are doing the triangle of trust, right? I know Jose. Jose referred me to Mary. Mary happens to be a financial advisor. So I can call Mary. I can drop Jose's name and be like, hey, Mary, my name is Dustin. You don't know me and I don't know you, but Jose was telling me about all of the clients of his that you help serve. And as a local lender, I'm looking to partner with financial advisors like you so that I can find ways to hopefully bring you value, help you grow your business. In the meantime, let you know that I'm a source of information that you can refer. Because we don't know each other, my hope is that we can grab coffee next week. Do you prefer Tuesday or Thursday? And then from there, I'm going to meet with Mary and I'm just going to rinse, repeat, rinse, repeat, rinse, repeat. And I'm going to do that 100 times. All I'm looking for is who are my 12 to 18 ride or die. But I may need to meet with 100 to find the 12 to 18 that are serious professionals who come across enough people on a consistent basis who need my product or service. They like me, I like them, and they want to refer me. From there, like anything, I'll build it out one client at a time, one referral source at a time.
I love it. I love it. So how do you stay in front of them? Because I did something similar with attorneys where like I realized I'm like, okay, realtors, title reps look at realtors as a referral source. Loan officer look at realtors as a referral source. So I'm like, who can I target that could be a referral source for me? And I built it a bunch around divorce and probate attorneys. But the challenge that I had, and eventually I figured it out, was I met with them. Now, how do I stay in front of them, which is a little bit more of the branding stuff? Like, do you guys teach anything that once they do get their 12 to 18, like how do you stay in front of them so that they're consistently thinking top of mind,
Yep.
hey, Dustin's the best person for
way.
loans?
Honestly, I teach people how to leverage social media. So through, so our brand is TLOP, right? TLOP stands for the Loan Officer Podcast. And anyone who's tuned in this far, if you are or looking to become a loan officer, like do yourself a favor, subscribe to our YouTube channel. It's TLOP. Listen to the podcast. These are all free. You can also sign up for my newsletter, which is free. Go to the website, tloponline.com. And eventually you'll probably need some kind of a coaching service. And dollar for dollar, bang for buck, we offer the top coaching in our industry for what we ask for in terms of an annual membership. Okay, so shameless plug aside, what we coach and teach, it's going to be this. Certain people you're teaching lunch and learns to monthly. You're hosting happy hours monthly. I need a reason to stay in front of people. I love having events because I can pick up the phone and invite you to the event. If you don't want to come to my event, you don't hurt my feelings, and I really don't care. What I care about is I held an event that you felt that you were invited to and you're welcome to attend. Now, if you attend my event, it better not suck. So if I'm going to do a lunch and learn, I need to do a lunch and learn where it's teaching a topic that I think my audience is going to benefit from knowing this. I love social media because I can, if I'm just going online and I am commenting on your post, I'm liking and hearting your post. Occasionally, you're going to post something that really resonates. I'm going to slide into your DMs. This is my way of staying top of mind without being creepy. They know what I do for a living. I don't need to always be that guy or that girl who's selling and marketing myself. No, I need to be a human being. Right? In fact, Jose, you can help me out here. There's a saying that we all know in sales. People do business with fill in the blank for me.
People they like and trust?
Yes, people they know, like, and trust. But let me stop you there. People do business with, what's the next one word?
Humans.
People.
Or people.
Yeah, people do business with people. Yeah. So be a person, be a human, show up in their life. Now, there's some strategies you can deploy to make sure that the right people keep showing up in your news feed and you're liking and you're hearting and you're commenting. Make sure you're posting yourself. Like, these are things that you can do. I'm still a big fan of newsletters. I love newsletters. Financial advisors should get a newsletter from you. And you can use video. You can use bomb or code video, and your newsletter doesn't have to be written. It can be spoken. But let them know what's going on in the mortgage market. Financial advisors know what's going on in the market, but they don't know what's going on in the mortgage market. A financial advisor is going to tell you that they think that mortgage rates are determined by the 10-year treasury. That's not true. I mean, mortgage interest rates are determined by the trading of mortgage-backed securities, or MBSs. Now, it is true that MBSs follow the 10-year treasury, but there's many times that the price of the 10-year treasury has gone up while the 30-year UMBS has gone down, meaning treasuries moved in opposite directions. So it's not always a foolproof methodology. And financial advisors don't know that if you want interest rates to go down, they might not necessarily know it's all going to be indicative of what's going on in the labor market. The minute we see unemployment go up to 4.3% or even crest over 4%, we very well could start seeing mortgage rates go down. Like, these are types of things that a really good seasoned mortgage loan originator could do to just keep the financial advisors in the know. So I'm a big fan of newsletters. I'm a big fan of happy hours, of lunch and learns. I'm even a fan of just staying in front of them, top of mind, by being active on social with them. Engaging, basically. Engage with them on their social media platforms.
Now, this happened to me recently where I was applying for a mortgage, and all of a sudden I applied, and then all of a sudden I start receiving like a lot of calls, like 20 to 30 calls. And I was like, and then I answered some of them like, oh, like we saw that you applied for a mortgage recently. We like to give you a second opinion, blah, blah, blah. What was that?
So that's called a trigger lead. And my industry is advocating like crazy in DC right now to stop that. We feel like it's an abusive practice where basically, because you had your credit pulled by one lender, that lender did not sell your information. I promise you, right? They don't want your information being sold. But when we pulled your credit, then Experian, TransUnion, and Equifax, that's the three repositories that we pull from. They then sell to other mortgage companies. Hey, look, by the way, Jose Morales just had his credit pulled for a mortgage. And they will sell those, they're called trigger leads, to dozens of other lenders. And those lenders then start hammering out the phones, trying to offer you a mortgage, saying, hey, look, I know you just got pre-approved with the lender you've used 17 times before, or the lender that helped your parents purchase their forever home, but you should use us instead, and here's why. So yeah, those are called trigger leads, and the Mortgage Bankers Association, as well as the National Association of Mortgage Brokerages, those are the two largest trade organizations in the mortgage industry. They are both advocating like crazy. There's a couple bills that have been floated by, both one in the House and one in the Senate, that if we can get enough people to vote on it, then hopefully we can pass a law that puts protections around trigger leads.
How does somebody buy trigger leads? Like, is there like a company that
contact Equifax?
And they'll and just ask for trigger leads, basically.
Yes. Yeah, I'm sure you could go to Google and be like, how do I purchase trigger leads? And there's plenty of companies.
That's the name of it.
Yep.
Because I've even thought about it, like, when I got that phone call, I'm like, is there a way to purchase trigger leads only in Ventura County, where maybe they have a mortgage professional, but maybe they don't have a real estate agent yet at that point, you know? And I was like, oh, that might be a good source. Or even for maybe they're trying to refinance and they can't refinance their property. And maybe because they can't refinance their property, they're going to need to sell a property as well, too. So that always caught my attention. I was like, I wonder how they did that. I was never able to pull a name for it, but I just kind of always wondered. Any final thoughts or anything else that you think would be helpful for somebody looking to become a mortgage professional?
I mean, I'm gonna echo something I said, probably 10 minutes ago. This is a full-time white collar profession that requires blue collar work ethic. And the person who does well in this has a very high drive. They are resourceful. They love personal finance. They love to problem solve. They love people. They love helping people. And they have a aptitude, right? They're street smart. They may even be book smart, or they're well read or well traveled. And they understand that they're launching their own business. Even though if you're working for a top 10 national lender, you're still launching your own business. You're doing so under their corporate umbrella. So if you can't give it your all for 2 years, if you can't go 6 months without a paycheck, if you can't, embrace the suck a little bit, because you're not going to come out of any type of training class knowing what you need to know. You're only going to learn this by doing it. If you can't check those boxes or answer yes to those questions, it's probably not the right profession for you. Now, if you're anything like me, you'll be lucky and you hear someone warn you and you're like, nope, that's me. I have high drive. I'm very entrepreneurial. I'm very competitive. I'm very coachable. I am an endurance athlete. I do have high aptitude. I love personal finance. I love to problem solve. I love people. I can embrace the suck. I can start for 6 months. If that's yes, 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 oh my gosh, what an amazing, beautiful industry that has provided for me, my family, 10 times more than I ever thought I would ever be able to accomplish when it comes to being a business operator, a business owner, and more importantly, the money I've earned, the money I've saved, and then the lives I've been able to impact with that money. Oh, it's been fantastic. But it's not easy. If it was easy, everyone would do it.
100%.
And yeah, I think it would just be understanding what you're getting yourself into.
I love it. Okay. Dustin, I do want to say thank you for taking the time to come on the show today. In today's episode, we had Dustin Owen. We covered what does it take to become a loan officer. We also went over a couple of things like a day-to-day as a loan officer. We went over how to generate leads, how to brand yourself. We talked about as well, too, as to how to become a top producer. If you've enjoyed this episode, make sure to hit the share button. If you feel that this episode will be helpful to somebody, share the podcast, basically, in other words. So thank you, Dustin. Appreciate your time. And to our viewers, until next time.